Chapter 2, Job Order Costing, comparing plant-wide predetermined overhead rates to departmental predetermined overhead rates. Hello all. This video compares plant-wide predetermined overhead rates to departmental predetermined overhead rates. The drill is designed to show you how to determine the plant-wide predetermined overhead rate and the departmental predetermined overhead rates, how to use both approaches to apply manufacturing overhead to product cost, how to determine the total cost of a job, how to determine product unit cost, and how to set a selling price using a markup on cost approach. At the end of the problem, you'll be asked to compare the two approaches and determine whether the total manufacturing cost will be over or under costed if you continue to use a plant-wide predetermined overhead rate. Our problem involves the PG Corporation. The company has two manufacturing departments, machining and finishing. A job order costing system is used because of the uniqueness of its products. Total cost is determined by adding actual direct materials used to actual direct labor cost and then applying manufacturing overhead based on a predetermined overhead rates. At the beginning of the year, estimates are made on machine hour use, total cost of fixed manufacturing overhead, and variable manufacturing overhead per hour. PG Corp uses machine hours as the allocation base in both production departments. Further, the company uses an 80% markup on manufacturing costs to establish selling prices. PG Corporation has been using a plant-wide predetermined overhead rate to cost its products. You've been asked to determine the total cost, the unit cost for each product, and the selling price for both Job F and Job K. The Job F order includes a batch of 1,000 units, while the Job K includes a batch of 500 units. You are to use a plant-wide predetermined overhead rate as well as departmental predetermined overhead rates, determine the cost differences for each. Understanding the problem is always key to preparing an answer. Meeting the requirements requires that you present a comparison of total product costs using a plant-wide predetermined overhead rate and departmental predetermined overhead rates. The key concepts here are plant-wide predetermined overhead rate, departmental predetermined overhead rate, manufacturing overhead applied, total product cost, product unit cost, and markup pricing. I will use PDOR when mentioning the predetermined overhead rate, and I'll use MOH when discussing manufacturing overhead to save time. Let's start by determining the predetermined overhead rate. The PDOR is always based on estimates and is done at the beginning of the period. The PDOR formula requires that you divide the estimated manufacturing overhead for the year by the estimated amount in the activity base. For this problem, to determine the estimated MOH, we need to add the fixed MOH for each department to the estimated variable MOH for each department. The fixed MOH is easy. It is $40,000 for machining and $5,000 for finishing. So you have a total of $45,000 in fixed MOH. The estimated variable MOH requires that you multiply the estimated variable MOH cost per machine hour by the estimated total machine hours to be used. For machining, we would multiply $2.50 per machine hour with 10,000 machine hours used to get $25,000. For finishing, you multiply $1 per machine hour by 5,000 machine hours used to get $5,000. Adding $25,000 and $5,000 gives us a total variable manufacturing overhead of $30,000. To get the total estimated manufacturing overhead, we just add, summing the total column for fixed costs of $45,000 and variable costs of $30,000 gives us a total manufacturing overhead estimate of $75,000. Adding across for each department gives us the same result. Now that we have the estimated MOH, we can divide it by the allocation base and determine the PDOR. The allocation base is machine hours. For the plant-wide allocation base, we look above and bring down the 15,000 hours and divide the $75,000 by the 15,000 machine hours to get a PDOR of $5 per machine hour. The reason we are using the estimated MOH of $75,000 and the machine hours of 15,000 is because this is a plant-wide rate. So our plant-wide rate is $5 per machine hour. For the departmental PDOR, we will divide each department's estimated MOH by the machine hours for each department. For machining, we divide the estimated MOH of $65,000 by the 10,000 machine hours to get a departmental PDOR rate of $6.50. For finishing, we divide the $10,000 of estimated MOH by 5,000 machine hours to get a departmental PDOR of $2. So now instead of having a single rate that we'll use throughout the entire plant, we have rates for each department. Now that we have the PDOR, we can apply manufacturing overhead to each product. MOH is applied by multiplying the PDOR by the actual machine hours needed to produce the product. For both jobs, we need to go through the machining and finishing departments. The plant-wide approach requires that for job F, we multiply 6,000 machine hours in machining by $5 to get $30,000. For finishing, we multiply 4,000 machine hours by $5 for $20,000. So the total manufacturing overhead to be applied for job F is $50,000. We are doing exactly the same thing for job K. We take the PDOR of $5 per machine hours and apply it to both departments. The activity in machining is 4,000 hours. The activity in finishing is 1,000 hours. We multiply those numbers across and we get $20,000 for machining and $5,000 for finishing for a total manufacturing overhead to be applied of $25,000. The departmental PDOR approach does the same thing, except instead of using the plant-wide rate of $5, it uses the departmental rates. For job F, we multiply 6,000 machine hours in machining by $6.50 to get $39,000. For finishing, we multiply 4,000 machine hours by $2 to get $8,000. So the total MOH to be applied for job F is $47,000. For job K, we multiply 4,000 machine hours in machining by $6.50 to get $26,000. For finishing, we multiply 1,000 machine hours by $2 to get $2,000. So the total MOH to be applied for job F is $28,000. At this point, we can determine the total cost for each product. Total manufacturing cost equals the sum of direct materials, direct labor, and manufacturing overhead applied. Notice that we are referring to manufacturing overhead as manufacturing overhead applied. The term applied refers to the fact that for each job or product produced, we are applying a portion of our total company manufacturing overhead using a predetermined overhead rate in order to arrive at a total cost. This approach is referred to as normal costing. Let's determine total manufacturing and unit cost using the plant-wide PDOR approach first. For job F, we look up and bring down the direct material cost of $16,000. We bring down the direct labor cost of $19,000. And then we look above and bring in the $50,000 that we had calculated for manufacturing overhead applied. Adding the three cost components gives us a total product cost of $85,000. For job K, we do exactly the same thing. We bring down the $7,000 of direct material cost, the $9,000 of direct labor cost, and the $25,000 of MOH to be applied. Adding the three components up gives us a total product cost for job K of $41,000. If we add the amounts across, we get a total manufacturing cost for both products of $126,000. Once we have determined the total job cost, we simply divide the total by the number of units in the job to get the per unit cost. Since job F included a batch of 1,000 units, we divide the total cost of $85,000 by 1,000 units in the job. The unit cost for job F is $85. For job K, we divide the total manufacturing cost of $41,000 by the 500 units in the batch to get a unit cost for job K of $82. Now let's determine total manufacturing and unit cost using the departmental PDOR approach. For job F, we enter the direct material cost of $16,000, the direct labor cost of $19,000, and then the MOH applied of $47,000. Adding the three components gives us a total product cost of $82,000. For job K, we do the same thing. We enter the $7,000 of direct material cost, then $9,000 of direct labor cost, and finally the $28,000 of MOH to be applied. Adding the three up, we get a total product cost for job K of $44,000. If we add the amounts across, we get a total manufacturing cost for both products of $126,000. Note that the total product cost is the same for both approaches. Again, the cost per unit is determined by dividing the total job cost by the number of units in the job. For job F, we divide the total cost of $82,000 by 1,000 units in the job. The unit cost for job F is $82. For job K, we divide the total manufacturing cost of $44,000 by 500 units in the job to get a unit cost for job K of $88. The selling price recommendation is based on a markup over total cost. The calculation involves multiplying the total manufacturing cost by 1 plus the percent markup, which is stated as a decimal. For the plant-wide approach, the manufacturing cost for job F was $85,000. And since our markup is 80%, we will multiply the $85,000 by 1.80. the selling price would be $153,000. For job K, the total manufacturing cost was $41,000. To get a selling price, we multiply the $41,000 by 1.80. The selling price for job K is $73,800. We determine the selling price the same way for the departmental approach. The manufacturing cost of job F was $82,000. And since our markup is 80%, we will multiply the $85,000 by 1.80. The selling price would be $147,600. For job K, the total manufacturing cost was $44,000. To get a selling price, we multiply the $44,000 by 1.80. The selling price for job K is $79,200. Our final step is to compare the two approaches and determine which approach is most beneficial for our company. The schedule shows that if we continue to use the plant-wide PDOR approach, we will overcost product F by $3,000 and undercost product K by the same amount. Overcosting a product will result in a higher selling price than needed. Undercosting a product will result in a selling price that may be too low. The approach selected is a management decision. The departmental approach should be more accurate since it focuses on cost drivers for each department. Management will select the more accurate approach as long as the cost to accumulate the additional data does not outweigh the benefit received. There you go. You have just completed a comprehensive job order costing problem comparing the plant-wide PDOR with a departmental PDOR approach. Thanks for viewing the video. Good luck.